Sameer, what triggered yesterday's selling? Only oil or something else?
Well, Nikunj, India has been a very sensitive market the moment you have any news on the oil coming. So therefore, we have a situation whereby there's no positive macro coming in. At the same time, you have a global backdrop which is not very conducive from a net importer point of view like India. So I think that's where there is some amount of fear factor that perhaps has caused some amount of money to be taken off the table. But having said that, I think the fear is probably getting ahead of itself, because when you have assurances from the Saudi minister, as you rightly said, you have our own oil minister saying that yes, we've already picked up more than half of our month's requirement from Saudi, and plus we've got other multiple sources to look at in terms of our crude oil requirements. I think the fear of what will happen in terms of the prices is probably more than what will actually happen. And hence, when you say the oil marketing companies have taken a hit, I think even yesterday, oil marketing companies have actually raised, auto fuel prices by the highest in the recent past. I mean, 17, 18, 20 pesos. So I think the mechanism of the price deregulation is completely seamless. It is being followed. And the fear factor is perhaps leading to this opportunity in specific sectors where I think people should start looking at, because I think this is not something that will remain forever. And as the US president himself tweeted, that they are not in a hurry to go and press the button. So having said that, it is quite probable that there would be some markdown in intentions. People will come back to the table, and prices which have right now ruling at say 10% above Friday's close may also tend to see a bit of clawback. But I think from the earnings point of view today in India, there's just no confidence that yes, we'll be able to see the light at the end of the tunnel soon. And maybe that's the reason why that now slowly you're finding wherever there is high ownership, high valuation, I think people are wanting to be the first to get out of the door. And that's why you saw money being taken off at least the large, well-held, large cap names in yesterday's trade.
Yeah, exactly. And if you look at the price action on the HDFC twins, or for that matter, Axis Bank yesterday, that was looking a little bit scary. Not to say that HDFC Bank has not already underperformed in the last fortnight or so, but Axis Bank saw a vicious 4.6% cut coming in. I don't recall in the last 6 months when Axis Bank on an intraday basis fell that hard. And, I guess you can really see or sense that there is some method to the madness, because FIIs have sold about $5 billion in Indian stocks in the second quarter. That is the highest quarterly sell figure ever, higher than what we saw even back in 2008. And I guess, that explains it all, Sameer, because now it's the last of the family silver being sold, the Axis and the HDFCs of the world.
Well, Aisha, in all these names, you've had very good runs over the last 4-5 years.
True,
so
that's where profits are.
So, that's where you're sitting on a lot of gains. And in case the near-term outlook is not looking good, because the broader market is actually down 25-30% at the index levels, probably individual stock levels is even more drastic. So if I have to take money off, frankly, these are the only things that will sell. So I think it's also a question of, if I have to take money off the table, where do I sell, and what is basically saleable? So it's a twin factor that when you have had high trailing returns which are positive, high ownership, that's the only place that probably you'll find the large impact of selling coming in.
Power sector. We've got the management of Tata Power and the power secretary coming today. So we're just doing our prep analysis as to what really are the issues which are currently plaguing the power sector. Sameer, the power space right now is in an interesting conundrum. Power capacity is slowing down and power demand is slowing down. Who will be the ultimate beneficiary? Because a lot of private players have gone belly up.
Nikunj, I think power, electricity generation, at least over the recent past, if you look at all the IIP's numbers, they have been actually the shining star. They have been the real contributor to the growth. So today, if you look at say August numbers, you had the diesel demand coming off quite appreciably. Now, there could be a case that yes, there was a lot of rain, so hence the movement was restricted. That is also a fact. But I think there is also some underlying fact that the power availability across the country has actually gone up. So therefore, that is also a part of the narrative that might be true. It may not be true entirely, but it is definitely contributing to the factor. So therefore, today, with the kind of reforms that have been thought of in terms of the DISCOMs having to pay up within a given amount of time, the Uday 2.0 that is being talked about, and LCs have to be raised before the DISCOMs can be made to purchase more power. I think these are good signals. So power utilities, because you can't have growth without power honestly in India, Nikunj, because the way it works is that yes, even today a sufficient block of our installed capacity is still thermal. Yes, you're right, there are a lot of capacities which did not have either PPAs or linkages. They have had a situation because of which banks have been saddled with these NPAs. But at least the ones where the capacity is erect, the PPAs are in place, the plants are operating at a 70-80 kind of a PLF, I think for them it augurs well, because the reform that is being put forth is all in the right direction. So the moment you have, and I think today consumer doesn't have a problem paying for power as long as he's getting in a short supply. So today, from the consumer end as well as from the regulatory end, all that is happening is only positive for the power sector.
Okay, another interesting meeting today is that there is, what we understand, and completely source-based, that there could be a high-power committee chaired by the Home Minister Amit Shah on Air India disinvestment. Amit Shah to chair the first meet on Air India disinvestment on 19th of September, that's tomorrow. That's a complete source-based story. Now, government in the past had shown their intention to divest Air India. But Air India is an asset which did not attract any buyers. And the reason why it did not attract any buyers is because there is a large debt of about 45-50,000 crore. There is an operating loss. There is a large workforce. And there is a relatively young but abused fleet of aircrafts which they have, where the utilization and efficiency is not that great. So the challenge is that in the aviation sector in India, right now demand is there. One large private player, Jet, has already shut down. You now have two large players, which is Indigo and SpiceJet, one small player, which is Vistara, and the air traffic in this slowdown also continues to grow, and India is getting connected. So the big picture story for the aviation sector, I think, is quite appealing. But given how complicated Air India disinvestment is, there is land, there are labor issues, there is a huge debt. It's not going to be easy to divest Air India. But Aisha, I think this is the step in the right direction. You know, we were talking about Air India, just one of the government PSUs which is having impact on the exchequer. There is BSNL, there is MTNL, there is
long list of them.
It's a long list. I mean, we'll put that list out. But sooner than, I mean, this needs to be done. This should have been done yesterday, but I'm glad that Amit Shah himself is chairing this committee. So for me, this is a clear indication that there is urgency. There is urgency. I mean, if Amit Shah is chairing it, who's the Home Minister, he does not have the mandate to sit on Air India. There's another aviation minister. He just tells you the government this time is committed to say, okay, this is it, and we
Let's
need
get
to,
this done.
we have to get it done. 4,000 crores is what they lost for the last fiscal. That's about $700 million.
8,400 crores.
4,000, right?
8,400 crores.
Okay, I remember.
Can we play that graphic again? I think it was 8,400 crores rupees. That's the FY19 loss that Air India actually made.
Well, even that's more than $1 billion.
We'll just get that graphic in just a second. But, you know, Sameer, the point being that this is, 8,400 crore rupees. But anyway, you know, Air India divestment has been long in the pipeline. We've had everyone from Tata's to Interglobe Aviation as well at one point in time, but they all want a piece of Air India, not Air India as a whole. And I think that's where things were getting stuck. What do you think is a possible resolution to this?
Aisha, I think divestment has to be done with the objective of efficiency gain rather than just unlocking money. Yes, today the government just can't afford to be in business. That's a fact. But the idea is that today Air India was the start, but there are a lot of other assets for which there'll be many takers. So I think it's just let's not get bogged down by the fact that there's only an Air India to do. Yes, Air India has been on the planner. You've not been having much success over it in the last year because yes, because anybody who would want to take it doesn't want to take the entire liability with it. Now that is one. Second, if I have to squeeze out efficiency, I should be having the ability to, restructure the workforce and, sort of let people go if need be. I think those flexibility and operating freedom is something that any buyer would look for. And unless and until there's a very clear direction coming on that, I don't think people would be wanting to make a very, educated bid in trying to get the asset on and then trying to revive it. But I think government today, Air India is one. There are a lot of other things where you are actually using suboptimal capital.
India Post, 19,000 crore revenue, 15,000 crore loss. I mean, I understand there is a social angle to it that, Postcards, they still need to be distributed and circulated, and Diwali greetings can go through the mail. But there has to be a limit to what the losses are. 15,000 crore of loss on a revenue of 19,000 crore. BSNL, I understand that Air India got complicated. It's not an easy divestment to do. Post office, that has the biggest distribution network. You can really monetize that distribution network. Any FMCG company would cry and die and would give top dollar to really associate with that kind of a distribution network. India Post connects every nook and corner, every taluka, every pin code, every small house, and their distribution model, I think, is by far the most complex and the most advanced. It's not advanced, it's the most complex in the world.
It delivers.
It delivers.
But then, Nikunj, the idea is that in a country like India, where all these e-commerce people are chasing those 55,000 postcodes, etc. Now somebody has to actually lay the network and bear the cost. So the state has done that. But now you have to look at how do you extract the efficiency gain. So which is where the divestment has to be clearly efficiency outcome based rather than just raising resource. Raising resource should be a byproduct, because what happens is that anybody who wants to make a serious bid, he'll put up capital, he'll take on debt, he will want to see that I am able to extract a reasonable return within a given time frame. If I have to be only grappling with past liabilities for which I don't have any contribution to, I think that's not something anybody is wanting to buy into.
Okay, I want to look at HPCL, BPCL. I'm just coming back to you, because if crude is down, those stocks should flare up today. In the pre-open session, I think aviation, oil marketing companies, they should see a rub of green. It could be more than a rub of green. 250 rupees for HPCL, pre-open session. BPCL 379, again pre-open session. We understand that GST cut is not coming. If that is the story, where are auto companies? Auto companies today could face the music. There is, it's not a majority, but yeah, there is a section in the market which feels that auto sector is getting a GST cut. We understand that ain't coming. If that is the underlying thought, then will the rally in auto of 8, 9, 10% from the recent lows, will that get challenged?
It got challenged yesterday itself. There were very deep gashes on the likes of a Bajaj Auto, on a Hero MotoCorp. They were big losers. Maruti, of course, has been a continuous story. The other news that I just want to address is Reliance Industries. Mukesh Ambani has hiked his stake in Reliance by nearly 3% in the week gone by, and the additional stake has been acquired by Reliance Services and Holdings last week. Reliance currently just skirting around the 1200 mark, but this is, Sameer, material news, the fact that Mukesh Ambani has upped his stake. He's used this decline in the stock post AGM, post their plans of getting completely debt free, and increased that stake by 3%, which is sizable in a mammoth like Reliance.
Definitely, Aisha. I think what also it goes to show is that there has to be some understanding before you get into any sort of a deal with Aramco, etc. So maybe those things are being streamlined. So unless the entire details are out, yes, it is a very positive show of commitment and comfort by the promoter, because he's willing to put in money even at this price. So it is definitely a positive, but there needs to be the whole story that needs to be understood in a larger context. So by itself, yes, it is a definite positive, but there probably will be a larger contour that one needs to get a full sense of.
Nifty in the pre-open session is telling you that we could be in for a very flat kind of a start. Do you buy what CLS is saying, Sameer? Time to get out of FMCG, especially staples?
Well, Nikunj, I think there is definitely a lot of element of truth to that. I would tend to agree with them, because FMCG has been the last bastion of so-called consumption standing. And now, once you are seeing the impact of slowdown getting accelerated, you will see that people will start getting edgy with these 50 times forward multiples. And the high ownership notwithstanding, there is likely to be selling here, because simply the trading returns are good, valuations are expensive, and growth outlook is not that great. So it makes a clear case that if at all I have to pick up for one sell in this market, I think FMCG would be pretty high.